Hello again and welcome back to another session of Commerce class with me, Suman Rathore. Friends, banks play an important role in the financial system and in the economy. It is an institution which accepts deposits from the public and provides loans and advances to the public. As such, banks facilitate exchange of funds. They encourages the habit of saving among public and channelize them into productive uses. Actually, accepting deposits and providing loans and advances are the primary functions of banks. And apart from these primary functions, banks perform several other functions for the overall development of the economy. And for the convenience of study, functions of banks can be classified into two broad categories. First is primary functions, which includes accepting deposits and providing loans and advances. And second is secondary functions, which includes agency functions and general utility functions. So now let's discuss them one by one. So first is accepting deposits. People deposit their money in banks for sake of safety and for earning interest. And banks offer various kinds of deposit schemes to attract savings from people, like first is fixed deposit account. In fixed deposit account, amount is deposited for a fixed period from 6 months to 5 years. Deposits under this type of account earn higher rate of interest. The longer the period of deposit, the higher the rate of interest is paid under this type of account. The amount deposited into this account cannot normally be withdrawn before expiry of fixed period for which it is deposited. But in case the depositor needs money before the due date, he can borrow from the bank against the deposit. If he wants his money back before maturity, the rate of interest is reduced. Next is savings deposit account. The aim of a savings account is to mobilize the small savings of the public. A person can open savings deposit account by depositing a small sum of money. He can withdraw money from his account and make additional deposits at his own will. However, there may be some restrictions on the number of withdrawals and the amount to be withdrawn in a given period. A passbook is given to the depositor and all the amounts deposited and withdrawn by the depositor are recorded in this book. The rate of interest on savings deposit is lower than that on fixed deposit. Next is current account. Current account is primarily meant for businessmen and those people who frequently issue and deposit checks into banks and do other financial transactions through banks. The significance of current account is that the depositor can issue as many checks as they want to in a single day. The only thing is that the depositor should have a credit balance in their accounts. Current accounts also have overdraft facility, which means that customers can withdraw more amount than what is available in their account. And the important point here is that banks generally do not give any interest on current accounts. Next is recurring deposit account. The aim of recurring deposit account is to encourage regular savings by the people. Under this scheme, customers deposit a fixed amount every month, say rupees 100 every month for a fixed period. The amount together with the interest is repaid on maturity, and a passbook containing the deposits made is issued to the depositor. However, the rate of interest on recurring deposits is higher than that on saving deposits account. Next is multiple option deposit scheme. Now this is a new deposit scheme combining the features of current account, saving bank account and term deposit. Under this, withdrawals can be made as per the need and the requirement of the customer, and the balance amount will continue to earn interest at term deposit rate. One can also keep the deposit intact by availing overdraft facility to meet the occasional temporary funds requirement. Individual banks have their own deposit schemes to suit the current as well as future needs of the people. Now, banks also grant finance to businessmen, farmer, artisan and others from the money collected through various deposit schemes. They fulfill the requirement of people in various ways, like first is overdraft. Now, overdraft is the most common and convenient method of bank lending. Under this arrangement, a customer having a current account is allowed to withdraw more than he has deposited. He can withdraw up to a specified limit and for an agreed period, and interest is charged on the amount actually withdrawn during the period. Overdraft facility is generally offered to businessmen against the security of some assets or on the personal security of the customer. Now suppose the bank has sanctioned an overdraft facility to a businessman to the extent of rupees 1 lakh. The businessman has rupees 30,000 in his bank account. Now the businessman can withdraw up to rupees 1 lakh 30,000 whenever he has requirement of funds. Next is cash credit. Now under this arrangement, the bank advances cash loan up to a specified limit against current assets and other securities like shares, debentures, etc. The bank opens an account in the name of the borrower and allows him to withdraw the borrowed money from time to time, subject to the sanctioned limit. Interest is charged on the amount actually withdrawn and not on the sanctioned amount. The arrangement is very useful to businessmen, but the limit of cash credit is fixed on the basis of goodwill of the firm. The borrower can withdraw money in installments as well, and he can also deposit back any surplus amount from time to time. Next is discounting of bills. Businessmen generally do not wait till maturity of bills. Thus, they can get them discounted from bank. However, banks give cash against the bills after deducting the amount of discount. And on due date, the bank gets back the full amount from drawee. But in case the bill so discounted is dishonored, then the bank claims the full amount from the customer together with the expenses incurred in this connection. Next is loans and advances. A loan is a lump sum advance repayable on expiry of the specified period. It may be secured or unsecured. Generally, a loan is granted against the security of assets or the personal guarantee of the borrower, and interest is charged on the whole amount, irrespective of the amount actually utilized. The bank may allow the borrower to repay the loan in lump sum or in installments as per his convenience. Now, banks also act as an agent of its customers in certain matters, like first, for collection and payment of checks, bills, drafts, etc. Now, banks act as an agent of its customers for collecting or for making payment of bills, drafts, promissory notes, etc. as per the instructions of their client by charging a commission. Next is bank draft. Money can be sent to different places by bank drafts. A bank draft is an order on another branch of bank to make payment to the person whose name is mentioned in the draft. He can get the money of draft by depositing it in his own bank also. And bank charges a nominal commission for this work also. Next is collection of interest and dividend. Banks collect dividend and interest on behalf of their clients and credit the same to their respective accounts. Thus, the clients are saved from the headache of going to the banks on which the checks of dividend or interest etc. have been drawn. Next is sale and purchase of securities. Now, banks also buy and sell shares, debentures, etc. at the instructions of their client. They collect share money on behalf of companies that are being set up or for existing companies that are being further expanded. Next is accepting payments of certain bills. Now, customers can pay their water bills, house tax, insurance premiums, etc. through banks. Thus, bank serves as agencies also. Now, apart from all these functions, banks also perform certain general utility functions for their customers, like first, they provide lockers for safe custody of jewelry, valuable documents, and other valuables of their customers. Second, they provide information to a customer about the creditworthiness of other customers and supply various types of trade information useful to the customers. Third, they underwrites the issue of shares and debentures of companies, which means that they give guarantee to the companies that they will buy the shares and debentures of the company to the extent of certain limits if they remain unsold. Fourth, they provide foreign exchange to importers and travelers going abroad. Fifth, they issue letters of credit, pay orders, bank drafts, credit cards, travelers' checks to their customers. Sixth, they advise customers on financial and investment matters for the good sake of their customers. So now we can say that banks are the lifeblood of the economy. They are essential for the development of agriculture, industry, trade, and commerce. That's all for today. Thanks for staying in tune and don't forget to like and subscribe my channel. Thank you and goodbye for now.